So then let's start. I hope you had all a great start in the Monday and into the new weeks. It's a new week, a new day, it's a new dollar, as they say. So can everyone see my screen? My window? Yes? Okay, thank you. Today I would like to talk a little bit about inversion fair value gap, also known as IFVG, what it is, how can we use that, for example, in our 15-minute breakout, and yeah. So if someone thinks that's a good thing for them, they can use it in the future. If someone think no, it's not my thing, so you don't have to. But I think most of you guys would love that actually. So the inverse fair value gap, or again IFVG, I will short say it, is a price action concept in inner circuit trader ICT and smart trading concept SMC, where an existing fair value gap, let me bring the picture here, an existing fair value gap is completely disrespected here, as you see, and the body is and a candle with the body is closed above that. But first we have to talk about the FVG itself. What is an FVG? FVG, if we have a 3 candle here, as you see, and we have a market balance here, leaving a gap. With the market balance and a gap, we're talking about the wick between the first and the third candle here. So we call that one here FVG, fair value gap. And the inverse is in the opposite. Because sometimes people draw the fair value gap here, they would like to wait here to see a retest of it, and it flips and goes down again. But the inverse fair value gap is using that in the opposite direction here. Let's say we have an U-turn somewhere, and now from a bearish trend, now we have an up movement. That means now we have a bullish trend here. And the first candle that closes above the FVG here, we're looking for a pullback here. Then now, since we're trading against it, that's the meaning inverse, trying to catch it from here, and from there to go to hopefully to our target here. That's the idea here. So since we are working already with breakouts here, so that could be something that would help us, because in the inverse fair value, or IFVG, I'm gonna call that, we also working with a breakout as well. We're working with the breakout candle above the FVG, so we are looking then for the IFVG then here. So when we go here, one of the best way to trade that is, for example, if you have a double bottom, for example, the high of the day, for example. Could be the high of the day, could be a double bottom or a double top, whatever. Low, high of the day, a single one, or if it is a double top or double bottom, it's even better actually. Where could we, for example, that was the day, when was it again? That was last week, Wednesday, for example. When we look here, we had a high, then we got another high here. And if I zoom in, let me bring the 5-minute here. Was that the Wednesday? No, my apologies. That one is not the Wednesday. That was the Thursday. My apologies again. Thursday, not Wednesday. So if I come here, I see I had a high here. Now I have a new high here, a double top here, and it shows me also a rejection here. On somehow we can also say exhaustion here. And I say, okay, between the first and the third candle, I have a fair value gap here. Okay. Now in the inversion, what I like to see here, if I zoom in, that one I would not encourage you to do, because it's near market opening, what we are going to the idea, or if you're willing to put that risk here. I see, okay, even the 5 or the 15-minute candle closing slowly below the fair value gap here, because that's the idea here, because we were on an uptrend, and now I'm using it inverse actually. So Once it is broken, actually, like a level that we use actually in the 15-minute chart, then we can wait for the first candle, how it's gonna be the how it's gonna be the rejection in that area, or you can say, you know what, I know it's nearby the opening here, maybe about the wick here. I would put my I don't know, a sell position here. My stop loss would be above that one here, for example. And now I see I have lots of room to come here from yesterday, for example. What was my breakthrough? I saw somewhere here, for example. Or to see after closing here, it could not close above that. With that one, it could close. It took some times actually. So I'm gonna say that's gonna be my, let's say, that is going to be my target. Again, targets, it's depending on you or what you see. It's from an objective point, it could be happening. It is also okay to say, okay, someone saying, okay, we had it here. Next time I say, okay, lots of things happening here. Probably it's going somewhere here. Okay, it's going okay for me to say here. I'm gonna put that here actually. So if you're looking to have, for example, a good R, for example, something like this, that's easily a 10R trade. Or if you go down here somewhere that I was showing here, it's easily 20R trade or even more. If you're looking for something like this, the best way of using the inverse fair value gap is when you have a double top or a double bottom or something like the high of the day. If you zoom in, you say, okay, what is the fair value gap? The movement here was going up here, so I have an imbalance gap between the first and the third candle here, so I'm gonna mark that. And after, now I'm looking for the first candle that closes actually break through the fair value gap, but not to the upside, to the downsides here. So it's going to the upside. I using the pullback in it. It could be a closing price, it could be a wick, it could be a limit order like that one here. And from there, I'm trying to get the home run here. So again, if you're looking, for example, if you want, for example, to know, okay, which fair value gap or inverse fair value gap I know, or IFVG, I'm gonna call it IFVG, it's gonna be a good R. So I'm not going for 4, 5, 6, or I can easily go for 10 or even more, 20, 30 R here. Try always to see in the 15-minute. You can try to use it in the 5-minute as well, but I would encourage you to use it only in the 15 minutes, since the magic, as you know, as I'm always talking, lies in the 15-minute candle. And try maybe to use the 5-minute to get in, actually, to have your entry there. And when you have a double bottom or double bottom or double top, when you have the high of the day or the low of the day, and you see obviously exhaustion there, and you see nearby and fair value gap, so now you're using that inverse, for example, in the opposite direction. So you want that the candle closes below, or if it's the opposite, it closes above that, and use the pullback to get in. Now you're able to get a 20R, the 30R trade, or at least a 10R trade here. So long story short, inverse fair value gap, IFVG, on high of the day, low of the day, could be like in double bottom, double top, it's even perfect. That's the signal, hey, from here I can get a long R here. Any question here so far? Okay, no one so far. Then let's go. There was something that I found actually. As you see here again, we had a somehow fair value gap here. The first one closes here, but we didn't get the retest here. So the retest happens later. But since this is the market opening here, it is not clear what will happen. You know, when the market opens here, it's gonna be crazy. But what you could have said, okay, something like this. You say, okay, that was the low of the day actually. So far. Okay, so far that was the low of the day actually. So I see I have a value gap here, the normal value gap here, FVG. So, but I don't want to use that. The reason why I would have gone here long, as you know, me took 1, 2, 3, 4 candle close nearby, or close also all nearby the wicks here. That would be the reason, not for the fair value gap here. So, but again here, now the first candle I like to see closes above that. Oh, it's that one here. Look, that one here closes. So I like to see how it gets here. Okay, it's get rejected, so it would be also a good idea to say, hey, from here I'm gonna go long. Let's say someone missed that opportunity here. Okay, again, has nothing to do with the fair value gap here. It has to do with the idea. I have a giant candle here. Took 1, 2, 3, 4 candle. That means 1 hour. It took 1 hour to come even close nearby, and it got even rejected. If you look at the wick here, okay, not only the wick got rejected yet, not only the price closes nearby, it closes also below the 2 wicks here. It's giving me you can go from here long. Let's say someone missed that opportunity here. The next opportunity for you here would have been, for example, to look for the inverse fair value gap. So now I'm looking for the first candle closing above that one here. So the first candle, it's gonna be that one. It's up to you to say, okay, I'd like to put a limit order here, but since the market has not opened yet, when I say market, no, that's not true. The market has opened. The New York session has not opened yet, so I don't see any reason to come here with a limit order. It's okay to see how it reacts here. If I see something like this, the latest would be with the doji here. I see it got rejected here each time. So from here, it would be a good idea to open a long position. Stop loss below the wick here, and now I'm trying to see, oh, I see I had a fair value gap here. Now that one could turn into a inverse fair value gap as well, for example, for me in the future. But I use again the FVG for me sometimes as target. It could be here or here, or since I cannot make a decision, I say, you know what, I put it just below the wick here. Okay, it could have been something like that, for example. And again, you had here a trade of plus 7R, 8R. That means if you miss out an opportunity here, please don't get emotional here from a psychological point of view. So try to find, if you miss that one here, as we were talking, trying to find something else. That could be the inverse fair value gap here. Or let's go to today's market. What we do have here. Since we are talking about the inverse fair value gap, I'm going to first start with that one and then go to other things here. Okay, I look here. Where do I have an inverse fair value gap here? I see, okay, from here to here. I'm going to mark that. So far, so good. Okay, now I'm waiting. For example, let's say you missed the opportunities. Again, we will talk about that we had here actually, but let's say you missed the opportunity. Oh, both are 15 minutes. That's the reason why they look so ridiculous. I'm sorry, my bad. So let's say you missed the opportunities here. We will talk about that, or even some would say here. We will talk about that here as well. You missed the opportunity here. So when you miss that, let's say, okay, what could it be for me? Other opportunities will appear too, like that one here. But if you see, hey, I have a fair value gap here. Let's say you couldn't have trade, I don't know, you were sleeping or whatever, you were working, whatever. So you're looking here and say, oh, I see, what do I see here? Yes, I had the yeah, I forgot to show you that. I can show that right now. I know I'm showing that on the markets here in live, but that could be something like this. Now I have a value gap. It's coming here, here, here. The first candle closes above. Now the fair value gap acts like in zone, for example, the zone that we use in the 15 minutes here. But I'm using that inverse again. That's the reason, the whole reason. I see it goes up, comes here, it gets rejected. Let alone that candle would have been enough for me to say I go long here, okay? But still, if I have also a fair value gap here, I see, okay, that's even a bigger indicator for me to go long here with that here. So that could have been the one position. And another one again here, as you see, I had a fair value gap here. Then the next candle is a giant candle, closes above that one here. I see, okay, it got rejected here. With that one, I can put with the market order or limit order here, I can start a long position here and hopefully go to my target here. So back here, I'm sorry to use the calculator as well as always. So I see that was my fair value gap here. Now, since I want to use that as an inverse version of it, I like to see the first, since it was a bearish movement, I like to see a bullish candle closes above that gap here, that fair value gap here. So it closes above it, so I'd like to use it as an inverse fair value gap. So if I come here to look here, it got rejected here. Rejected. One could have been, for example, here, try to go long, or if you like to use the 15-minute itself. Look what we do have here. What do we have here, guys?
Sort of a dip back into that that gap area, kind of liquidity sweep maybe.
Yes, that's correct. We have the continuation hammer, also known. Let me bring it here. That one here. Do you see it? That's the kangaroo tail.
Yeah.
And we have a double here, actually. Look here also as well. But
so those were the final sweeps, right?
Yeah, that could have been for you the idea to get in here, for example, the final sweep here as you're talking here. Let's say you say, you know what? I tried with the 5-minute here. It went to my, it was going good. I brought my stop loss below the entry point again, below the entry point. Otherwise, look, it could be something like this here. Look, guys, let's say you would have entered the position here. Okay, you saw that, so yeah, that looks good. I bring my stop loss below. That one here is good because if it, the next candle would get here, it also would get here. It doesn't make sense to go because we haven't sweep of the sweep. We had two sweep here, sweep of the sweep, and now we have a sweep of the sweep of the sweep actually here. So we do have a deep liquidity sweep here. So again, that's a triple actually. So if I see now it's going to my favor, I'm already 1K in plus. The only thing that I think is okay for me to bring it here to a small stop loss here. Okay, but let's say you would have bring it to a positive one. Maybe that one could have taken you out, and that's the thing that I'm always trying to say. Do not bring it again, do not bring it to break even, because let's say you come in with the market order. If you use the market order, it does not mean you get exactly here. Maybe you get in here, now you're using that here, and the next one would stop you out. Let's say someone says, Parsha, you know what? I missed out on that one. No problem. The markets always rewards people who are patiently waiting here. We have another free value gap here. And I'm not using that as a fair value gap. I like to use it only as an inverse version. Okay, here. Now, since that one is used, I don't want it anymore. I will take it out. So the next one here. Here. I see that one is coming here, get rejection. I like to see something more here with the 15 minutes. You're seeing that you can get in with the, I'm sorry, not with the 15 minute, with the 5 minute here. Your stop loss would have been here. Let's say you missed on the 5 minute here, or you wanted to see it in the 15 minute. That's fair enough. You came here, but reduce your stop loss. That one is way too much here. And from here, you're trying to get hopefully here then. Okay, and of course, since what I would have done here is to bring my stop loss to a near small loss here. So it would have taken me out here, or when the market opens here. So this is what we can use the inverse fair value gap for our 15-minute breakthrough strategies. If sometimes we have it even, you see, I have it, the breakthrough here nearby even happens above my 15-minute level here. Let's say you would have said, yes, I had a level here because I see the closing price here got only touched here. So that's gonna be, since that one, the first one broke here, it also broke above that one, and that is the retest that shows to me that's actually a strong one. But the reason why that one did not work, because it was maybe probably near market opening again. That's the reason, if you ask me. If something is not, you say, hey, I had a great signal here, so everything was here. Actually, it was an A++ setup. The only reason sometimes it's not working, even there is no guarantee in the market, in no strategy, whatever, there is no holy grail here, it's because it's near market opening, actually. That's the reason. So, any question here?
No, thanks very much. Very clear to understand.
You're welcome. So let's go to the usual things that we do here. Okay, that's a 3-candle pattern we see, but it's a huge one. And I see, I have sort of resistance here. I would be very careful with that, actually. And I see a strong one here, and and it appears to me, if I see something like this, I say, okay, that was the first leg. It want to do a pullback somewhere here, probably here or somewhere here, since I have that one is a huge FVG I have here. And from here, it likes to fly to go for the second leg, which was not actually wrong here. If you look at the bigger picture here, you can say until the high at least, you can see, okay, that was the first. That was the first leg. I have my pullback, and that's the second leg here, actually. So repeatable pattern again, guys, we're talking about. But let's say here, high of the day. What do you see here? Can anyone tell me here? What do you see here? What do you see here? One more time. What is it? That's an inside candle again. Yes, again, it's small here. I see the wick is a bit above that. I would like to see it inside it, but nothing is perfect. That's for me an inside candle, if you ask me. What's the next step? What would you like to see? The upcoming candles. So it shouldn't be just the first one. It could have been the second, third one, whatever. What would you like to see? What kind of closing would you like to see? I'd like to see a candle that closes above or below the first candle here, since that is inside it, and yes, the wick is almost the same. That one is here, that doesn't. If I see that one here, see, okay, I see that one here, that would have been for me to say, again, I saw the inner candle here, that one is inside that one here. I know the wick is a bit above it, but again, I call it as an inside candle, and I see, yes, it's struggling, trying to close from one side. I'd like to see one side actually to close above or below one side here. So I see that was it's trying to close nearby here. So I'd like to see the next candle close here probably. Yes, perfect. No wick here, no wick here. It shows me no rejection. You can come in here with the closing price, or if you like to put and pull back here, for example, to say I will get in here, for example. Okay, the only problem that I have here, if I go to the 15 minutes, I see the resistance that I had here. The first thing, if I'm willing to take that risk, because the only reason why I'd like to say I'd like to take that risk, because I see a huge FVG here, and I like usually take to those as my my target most of the time. So if I do not, hey, where can I have a target? I look for FVG and put it somewhere there. If we look close here, I say, hey, I had a breakthrough here. You see breakthrough here. Okay, which one could I take? I think, okay, that one looks even better for me here, if I'm honest. Because if you look, both somehow to the price. That's actually not the exact price, that's a zone here. They show some reaction. First it showed some reaction here, the second time it was just somewhere here. I can say it shows me some reaction here for me, because those two were close to each other. I said, okay, I will take it between those. So since I have that, I would say, hey, that one seems to be more stronger than that one here, because I see here after that it tried, it went through, and after it was a strong support, it became a resistance, but it was late of the day, it went through, so it needs at least to be retested again. So if I get here in the, if I open a position, let's say after seeing this candle is closing, again I have the inner candle here, I'm looking for the first candle close below the first or above it. Okay, it's closing here, I get with the market price, or I don't know, a small pullback. It's up to you here. Stop loss goes here somewhere, is above them, and my target here in the 50-minute could be here or somewhere here. I could, for example, say I could put it somewhere here in the mid of the body here. If you're willing to take the risk here, you can even say, okay, I'm trying to get nearby here, for example. Then you have exactly almost a 1 to 10 trade. It depending what's going to be your objective target here. But that could have, but the first thing that I would do after not that candle, but that one starts to come nearby here, I bring my stop loss immediately here, because I don't know what will happen here, and usually I do not like to take trades like that. The only reason why I took that, I had a huge FVG here, and I saw sort of resistance, not sort of, it was it took couple hours for them to get through that, and then it became after being a support, it became a resistance, then it go through. So I like to see the retest here. So any question here? Okay. Now when it comes here, truth to be told, the only thing that I see here, what do you see here, guys? Can someone tell me here? You see two things here. What do you see here? Exactly the same pattern that we have above. What is it? It's exactly the same pattern again. What was the pattern again? Inner candle here. So I'd like to see if the second candle is inside the first one. I'd like to see the third or the next upcoming candles. One of them closes above the first one or closes below the first one here. So if I see something like this, actually, truth to be told, that was showing me already exhaustion here. I said, okay, I had a liquidity sweep that shows me exhaustion here. I would have wished that could have been maybe a 3 candle pattern. So you know my favorite pattern here. It would be okay to say after seeing that, you know what, I will put a limit order here, try to go long, or to see that, hey, that shows me clear rejection here. I show here the wick is getting upper, so I like to go in here and try to go long. And that would have been also okay. But if I see that one here, there are two things that I see here. First one, I had an inner candle here. Again, the wick here, I don't like it being above that, but I like to call it like that way. So the next thing that I see, I like to see a candle above here, or close above the price here, or below the price here. So I don't know which direction it's gonna be. Since I have a huge one here, it's clear it's like to go up here. But what do I also see here? I see a U, like a U-turn here. I showed you that last week again. We had it on some Wednesday, or I don't know, Thursday was it that we had. So the things that I would do, I said, okay, I put my limit order here above the wick. So here, my stop loss will be below here somewhere. And from here, if I now come here, I see at least, I'd like to catch the high here. That one tried to catch the high here. It was not able to. At least the bare minimum for me would be try to catch the high here. Okay, and if we look here, that's a 1 to 8 trade here. Okay, The stop loss is here. Risk to reward here is 1 to 8. So that's easy, an 8-hour trade here. And if you're willing to take the risk here, then it would be a plus 10-hour trade. Or if you say, no, I think it will go even higher and you're holding that, it's up to you. But I would encourage you near market opening, get out of that trade. Because let's say you bought, like me, 10 contracts here and you were 3K in plus. Why would you give that away? Why would you give that away, that money here? So I would encourage you, personally, maybe I would have say, okay, if I'm not putting my target here, I'd like to see the first candle closes above here. Maybe you're asking, okay, Parsa, why don't you put your target and you're looking for the candle? Sometimes I'm thinking maybe it's going to be a bigger candle and it closes here, so I can even make a little bit more money. But if I don't have time to look at it, and let's say I would get into the market, okay, and after being here, but okay, what could have been possible happens here? Let's see, if I'm that much in positive, I bring my stop loss to a small loss, and that one would have taken me out. Okay, that one would have taken me out here. Because today I haven't had any trade so far because I had other things to do, but because I know how I trade. If someone would have entered here, for example, before having the confirmation, yes. But if I have this one here, that would have also be okay for me to go long here. Couple reasons here, guys. What I see here, maybe the next one could be a 3-candle pattern here, because, okay, I see that liquidity sweep here, and the next one could have been, for example, the 3-candle pattern, as it was actually. But I know since the candle is too big here, it's gonna be a big candle here. There are a couple of reasons why I would have entered here, because I see the liquidity sweep here. Probably there is nothing gonna be there. Then I see the wicks are getting smaller here. So I don't think that it's gonna be a huge pullback here anymore. The next thing that I see here, oh, what do I see here? The support level used to be here. Now it's getting upper here. So it's getting upper, 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 upper. So that's the reason for me to say, okay, I go long here with that candle, because that's like in piercing for me, or like the inner candle here that we were talking about. My stop loss is here, and from here again I'm trying to catch the loss amp here, because that one tried to come nearby here, so next time it need at least to come here, and that would have been for us yeah, depending here, it's gonna be almost 1 to 7, 1 to 6 point something trade. But again, plus 6 hour, money is money, a win is a win. So sometimes if it takes you out, that's okay. If you see another opportunity, you can enter again. Any question here, guys? So, and since the market open, oh, here, look here, guys. That was here, and what do I see here? I see a liquidity sweep here. If someone would like, can take the risk here. You say, you know what, I take the risk here, I get in here with the closing price, or you know what, it's a bit above the level, I put it here, just my stop loss go below, for example here. It's a bit too much if you ask me. But if it's too much here for me, I do something else. I go with half of the position. So because I do not like to have my stop loss much above $400, 10 bucks, 20 bucks, it's okay, but not something like this. I wait for the third one. And if you wait for the third one here, what is your favorite pattern here, guys? What do you see here? What's your favorite pattern here?
3-candle pattern.
Exactly, the 3 candle pattern, right? That's correct, actually. That's a 3 candle pattern here. I would have gone here with the closing price because I have my 3 candle pattern here, and it shows me exhaustion, exhaustion. My stop loss go below the level here, and from here, okay, let's come here to the 15 minute here. So I'd like to see somewhere, maybe could be here. I see, hey, the first high of the day, it shows some reaction here. The bare minimum would be for me, okay, I'm come here, because if you look here in the 15 minute here, I had reaction here, reaction here, reaction here, and after that as well, and after that as well. So that would have been a good idea for me. And again, you had here, I don't know, a trade risk to reward of 1 to 6, 1 to 7, and still good money here. So do not trade the opening here. What would it be here? That would have been, yeah, more than 45 minutes, almost 1 hour after the market was open, because 10:20 it was split by 10:25. This is the 5 minutes, and 55 minutes, almost 1 hour after the market was open. So as you can see here, the market always rewards people who are patiently waiting. Or look here, what do I have here, guys? Can someone tell me here a couple reasons? Why would you go long here? Couple reasons. Give me a couple reasons here, please. I was talking about we could have gone here long time. Oh, about trading. That's coming probably in a couple of weeks. We will start with live trading session in Asian market. So good for those who lives in United States or Canada. For you, it's gonna be somewhere around, depending if you are east side or west side of the country, it's gonna be somewhere around 7 p.m. to 4 p.m. starting, something like this, or even a bit later, maybe 30 minutes later. But for me, who is living in Germany, I have to get up at 1:15, 1:30 a.m. in the morning or night, whatever you like to call it. So good for you. For Tarek, for example, is living in Dubai. It's also not that much good, but it's still better than you compared to my one. So he has to get up, I don't know, 3:30 a.m. in the morning, but still better compared to me. So we will have live trading session here. I would not encourage people to try to say, okay, I will come here and copy whatever Parsa is doing or Avi is doing. It's okay to get some ideas here. We will talk about it, but it should be something before I say I will open a position here that you say, hey, I had the same idea here as well. So sharing is caring, actually. It's happening soon. Somewhere, I don't know, in 3-4 weeks, we will have every day. Besides weekend, we will have a live trading session, Asian market. Yes, again, some people say, why Asian? Because you see what a trend you can get here, or sometimes the trend that you're seeing here that we from last week here, that was in the Asian. Try to imagine you would have catched it here all the way down here. So you had an easy or 30-hour trade, whatever you like to call it. So, but back here again, guys. Now we're here. Let's say someone missed out that opportunity here, okay, and see, oh, slowly it's coming down here. What do you see here? First of all, yes, if it's coming slowly down, I say, okay, that's gonna be the pullback. Now it's like to go for the second leg here, whatever. What do you see, guys, here? Let me put my calculator, make it bigger, and put my calculator here. Yeah. What do you see here?
You see a kangaroo tail?
Yes, you see a kangaroo tail. Yes, it's a big one, but it's still a kangaroo tail. Truth to be told, it is that one here, the continuation, actually, what you see here. So now it's gonna go up. But what else do you see here? What pattern?
The 3 candle pattern?
Well, yes, later, yes,
one.
but there is another pattern here. Big candle, same that we always talking about. Where was it here? Oh, it was in the 15 minutes last time. Here. I had a huge candle. It took 1, 2, 3, 4 candle to come close nearby here. It shows even rejection, and the one here, the close is even above those 2 weeks. And if we come here, And if we come here, I see similar things here too. I have 1, 2, 3 candle. Yes, it's far away from that one here. You're correct if you say, okay, there is still much room here. But since we created some wicks here and now that one is closing below that one and shows good rejection here, if that would have been a good idea to say, hey, I go long here. My stop loss somewhere here, for example. Yeah, could have been whatever. And from here you say, you know what, at least I'm trying to get the high of the day, or even no, at least somewhere here. It's up to you. So let's say you would have say, hey, I would get somewhere here. That could have been also a 1 to 6, 1 to 7 trade again, depending on your stop loss and your target. But let's say you would have exactly entered the position, the one that I did here, with the closing price, with the same arguments, and the stop loss would have been the same, and the target would have been also the same, regardless how much you're buying, 1 or 10 or even more. You have to erase 1 0 or to put 1 0 more there, or the comma you have to switch here. But that would have been a 1 to 6, 1 to 7 trade here. Any question here? No one. Okay. Let's go to the, I don't know what's happening here. I'm using that. Maybe some of you have ideas. Suddenly the session break is here and I'm applying to all. I close it. I did restart and I take it off and take it on again, but I don't get the session break here. I don't know why. Okay, let's come here. That was from, I think we talked about that one here. Again, with the 3, that was the separation here somewhere we had. I see 3 candle. Okay, have a good one, Sober. See you next time. So I see, do you remember here what we were talking? 3 candle in a row. We have 3 candle in a row. That shows institutional conviction here. So if I have here 3 in a row and I see, okay, it broke even through here, what I would have done here, I would have done here, put a long position here. Why here? Because you see that's the closing price. They're somehow respecting here. I had a, let's say, breakthrough or false breakout here with the closing price, but again, they can't go through. So my stop loss, again, $1.50 here, would have been here. And what can I try to catch here? Maybe I can say I try to catch the high here, or it could be that one here. It's up to you which one you like to get here. Let's say you would have tried to get that high here, and again that would have been almost a 1 to 7 trade then. That's Tesla, by the way, again. And if we look by today, I actually did a position, but it burned me because I saw a huge candle and I said, okay, that like to go and come here. I said the 3 candle pattern here. I say, hey, that looks good. The wick is above the small wick here. You see, a win is a win. Then that one closes below. It's engulfing that one. The wick is above the wick as a liquidity sweep of the liquidity sweep itself. So that tells me, what does that one tell me here? It tells me that's an A++ setup here. What I did, I said, okay, I put a limit order here after the closing price. Stop loss would be somewhere here. And I thought, okay, we're credit bid. That one doesn't count. I'd like to go nearby here. It will definitely, but I will have a close look here as well. And I was trying to go somewhere here. Okay, because as you saw, it appears that there is something here. But I was thinking maybe here could be as well good too. Maybe I could get out here as well. Again, and I said I would take a close look to that one. But what did happen? It went through. So now it went through. The next possible good trade, what could have been here for me? I have a question for you guys. Let's say you had the same idea. You see 3 candle pattern, liquidity sweep. No, you have the 3 candle pattern here, and you have a strong one engulfing cross liquidity sweep of the liquidity sweep double. So let's go short here. It's actually a good idea. That's what I'm always saying. There is no holy grail here. Do not think because it's 1 time, 2 times not working for you here, or the worst possible thing is sometimes you missed out on something. Yeah, look here, that was the 3-candle pattern, I don't know, somewhere here, I missed out. And the one that you're not missing out in, it's actually a A++ one. You get unlucky here, so it's not, in that matter, whatever reason, is not working for you. That does not mean that the 3-candle pattern is not working. It's working, but there is no holy grail here. There is no one in the market you can do every day money, or each trade is money. So keep that in mind, please. So let's say you got in here the way that I did, but your stop loss got hit. The next one is that one here. What would be next idea for you here? What do we have here?
Engulfing pattern.
Engulfing pattern. But what we do have here? Look,
with
we had an
3-candle. Another 3-candle pattern.
Yes, you can say another 3-candle pattern somehow too. That's a special one, good one. Not everyone can see that, because now you can say yes, that's the first leg, the pullback, and now it's going for the second leg, and there is somehow a 3-candle pattern here. It engulfs the previous candles, and it has the liquidity sweep of the liquidity sweep of the liquidity sweep. That's good, but there is something else here.
The inside candle?
No. It should be then opposite, actually. You can use that inverse too. You can say, okay, that is inside that one that broke above it. Okay, you can try something, but I'd like to see. I had actually, as you see, I had a level from previous days here. You see what did happen here? It couldn't go through, and then it came here. It broke it, retested. That's actually perfect, actually. That's what I like. It's retested and went up again. And then what happened? Then we had a gap here through the aftermarket, pre-market. Again, we do not look at the pre-market after. You can do that, actually. But if you like to stay as conservative to the strategy that I'm presenting here as possible, turn off the pre-market, aftermarket. It's noise. And again, I don't know why I don't have the section break here, like the blue line here. I don't know why I don't have it here. It's not working. I don't know. Okay, that was from here. But even though I see, let's say I did not have the green one here, I would even create myself one. Why? Because I see it tried, it couldn't go through, but now it went through. I would immediately draw a line here. Immediately. Let alone to know that even the 3-candle pattern here. What you can do here is to say, okay, above the wick here, for example, it's up to you where, let's say you would have catched a good one here. I'm trying to go long here. What could have been the next possible? You can say, okay, somewhere here. The closing price here and the wick here somehow. Again, stop loss would have been $150 max. $1.50 is max. But the moment it reached here, the first thing I do, I bring it to a small loss here, like this one. Can someone tell me, what do you think, which pattern do you see here? We talked about it a couple of times. Which pattern do you think you see here?
My favorite. My favorite 3-bar play.
Not exactly. For that, you needed to have that one here, and be careful here with the 3-bar, with the 3-candle pattern that you're talking about. You see lots of noise here with the wick here, actually. And if I look here, but you see something else here. I said if we have a big candle, actually, it could be the whole body. It could be a body with wick, or sometimes the body is closed. The wick, actually, you see the small candle building in the wick. I see 1, 2, it appears to me that it will build smaller candle nearby here, and from here it likes to go up. So it's gonna be a similar candle like this to have it here. Let me close that one here. So that was, so what would it be? First leg, pullback. Second leg, pullback nearby, and now it's like to go for the third leg here. We are not always having third leg, but it appears to me, again, I have no idea what will happen next. but based on experience, I'm anticipating it's gonna be somewhere the opening price and the wick here, so we get the signal from here. You can go long, then you can take the position here and try to go for long here. Any question here, guys?
Yeah, Parsa, I have a question.
Yeah, please.
Do you have a rule of when you bring your stop loss closer to your entry, right below, or does it depend on the price action?
It depends actually to the price action, or if I see it gets choppy there. Because most of the time, let's say I would have gone here. It got me in here. Let's see, I put it above that here, and it was first here. And I see that one went here, 300, and now it's coming here. It appears that it could play a little bit here. At least what I would do is reduce it by the half to bring it here, because maybe next time it's trying to get near the level here that I draw. Okay, but after that one, definitely I would say I bring it here. Or if that one would have closed here nearby the wick, like the one here that closes nearby, I would have definitely brought it to a small loss here. And again, I encourage you, I know, bring it to a small loss than to okay, the difference is this: if it will hit you the small loss, it would have also hit you with the small wheel, which would be break even. Let's say you're buying one here, let's say one Nasdaq 100 here. If you get out with $10 plus or $10, you lose $10, that's nothing. But try to imagine that 2 times it happens, it took you out. Okay, you lost $20. If you would have brought your stop loss to break even a bit above your entry point, you would have exited the position with no losing money here. But you lost $20. But the third time it comes nearby here, we had it here actually, or something like this here. Let's say here, something like this. It comes nearby here, but now it's going up. Or we had it here in the, I think in the 5 minutes or in the 15 minutes. Let's say here. Let's say, I don't know, whatever reason you missed that, you say, yeah, I have the 3 candle pattern here actually. The wick is here, that one closes, I put it here actually. Okay, you see that one would have taken you out here. So, long story short, what I'm trying to say is, accept the small loss instead of break even, but believe me, 1 time, 2 times it takes you, but the 3rd time it goes to your target. The difference is if you had all 3 times put your stop loss on break even, a bit above the entry point here, it would have taken you out with 0, no win, no loss here. Okay, so far so good. But okay, let's say you would have put it below the entry point. Two times you lost money, let's say each time $10. The 3rd time it went to your target, let's call it, I don't know, $150 for example. $150 minus the $20, you're $130 in plus. But all 3 times you got break even, 0, nothing here. You get my point here?
Yeah, thank you.
Okay, yo, welcome. So again, guys, what I think here is happening, again, there is no promise here. I think it's coming slowly, you see. Here nearby, then I like to see the rejection, and from here it could have also been just here. Again, if it's here, I like to see with the wick some rejection actually, and then from there someone can take it and go all the way up here. Let's come here, guys. So the market opened here, no, that one here, 9:30. That's what I hate if I don't have this section break. I hate it actually, guys. So the market opens here, I see this, and oh, and then I see that one here. Okay, and the level that you see is from previous day or week or weeks, whatever. Probably from last week or the week before that actually. If you see something like this, it's okay to say, okay, I go long here, but again, this is not Nasdaq, that's AMD, that's very volatile here. I tell you, you will burn yourself here. The next thing what I would do is, I wait for that, and after seeing that one, I say, yes, that shows me rejection here. Where you can get in is here, there are 2 choices. You can say, I use the level here or the wick of that one. Truth to be told, since I know myself, I would have used the level here, since I have one. If I didn't have any, I would have maybe used the wick here. So again, it's gonna be that one would have taken me out. Yes, that one would have taken me out because I do not use more than 160, 170. Maybe next time, especially talking about AMD, since AMD is very volatile and you have something like this, go with the wick actually. But that one would have taken me out. Yeah, that one would have taken out if I would have entered here. But let's say hypothetically you would have entered here, and again with AMD it's okay to have more than $1.50, $1.70, something like this. That's okay, or sometimes more. And next time I see, okay, since it didn't show any reaction here, it went through. Maybe I'm trying to find here something to say, I don't know. Here, the closing price here, maybe yes, that one shows even reaction, but that one went through. Maybe that was a catalyst, whatever, and I'm trying to get out here. But again, if it was for Tesla, it's here. But again, it's AMD, and since it is AMD, you have to be very careful here. Next time, maybe there is a wick, try more the wick here. Or if you cannot make any decision here, you say, with the wick, I'm afraid the pullback will not be that much big to get me in. But with the level, I think maybe the pullback like the one here, it's gonna be so deep, it will take me out here. So what's gonna be the solution? Easy. If I cannot make any decision between those two, between the low of the candle, the wick here, the bottom of the wick, and the level here, I put it just by my eyes in the middle, and my stop loss again somewhere $1.70, $1.80, below $2 definitely. So, and from there I can say, okay, where could be a target here somewhere? I can say yes, the closing price here, because the closing, even that one topped that one and went up, and then it went through. Okay, that one used to be a support. Since it used to be a strong support, it took, I don't know, you see 1, 2, 3, no candle could close below that one, and even the first candle of today, it tapped and went up, and then it broke through that one, the next candle. So I think that one is gonna be now a good resistance, which is it was not actually. But again, I use that as a target and as an entry point here, because I don't know what will happen here. So that could have been for you and 1 to 7 trade, 1 to 6, something like that, 1 to 8, depending on your stop loss. Oh, there was one something here. Did I trade that one? I think I traded that one and I lost that. Okay, what did I see here? I see here the up movement. Yes, I see the up movement started here. I had 1, 2, 3 candles, and it took the same candle to come stop nearby here. Okay, I tried to go long here. My stop loss was here. I was sure it will go up because when I was seeing that one here, it was very clear. The only reason why some candles would have come close nearby the wick here, the first one or the second one, I need to see bigger candle, not something like this. It's working very slowly here. So that was the reason for me to go long here. After that one took me out, the same moment I entered the position again, because I knew it was here. I knew that one needs to go up. Where was my target here? Because I don't know, I saw here it's getting choppy. First I was hoping to get here, but after I saw that one is getting choppy here, I said, okay, you know what, I'm okay with that if it gets me here. And my stop loss was of course bigger. That was my stop loss actually. And again, the only reason why I re-entered again, because I was pretty sure that one would not go down, because look how slowly they're moving here compared to those candles here. Those two were moving very fast actually, and I said compared to that, no, I like to see bigger candle to go here down. Now it doesn't show, and especially that one closes nearby the opening, the closing of that and the opening of the second candle here. And I was very sure, and I knew that was the stop hunt actually, from the icebergs, and from there they like to go up. That was here, and again that one is going up, and here you see, that's what I like about Tesla. Tesla is more clean compared to the other two actually. Sometimes you have, for example, more signals coming from AMD, SpaceX, then you have to accept it if you're only trading Tesla. But if you're trading all three of them, if you get a signal is here, it's much cleaner actually. So now if we come to SpaceX, the market on Friday, no, I'm sorry, Thursday. I think, what is Thursday? No, we talked about that. Okay, but let me say that one more time. You have a huge candle. It took 1, 2, 3. I think. Oh, it's trying not that one. That one tried to get with that one here. So now it's going to be interesting to see the next upcoming. I would like to close here or here. If you see, oh, they're trying. They're not even getting close to that one here. What you can do nearby here, put a limit order here. Okay. That one tried to get to one here, and then the next 1, 2, 3, they're getting nearby the wick here. What you can do is nearby the wick, put your limit order, and try, for example, to get here. But I would not encourage you to do that trade because the bare minimum what I trade on stock market is 1 to 3 plus 3 hour, and that's not a plus 3 hour. That's a 2 hour trade. It's not worth it actually. So stay away from it. And here, as you can see, what we do have here. What we do have here. What we do have here. You can call it 3 candle pattern actually. Yes, it's actually almost actually it's 1 cent above that one, or you can call it actually a piercing with confirmation. Piercing, why? Because the second candle is inside the first one, and the confirmation is when the next upcoming candle closes above the one here, as it did here. So next, what you can do, you can, for example, say, okay, I will put a limit order here, exactly here, or with the closing price, whatever you like. Again, bit more than $1.50 here with that. And now I'm trying to catch the at least here. Even if you're willing to risk, you can come here. And if you're that much in plus, like the one here, or even here, I would have done it actually, truth to be told. Bring your stop loss here to a small loss. That's it. Let it run from here. And if your stop loss gets hit, that's okay. You see here, I mean, look how beautiful the 3 candle pattern here. And one of the reasons why I would have gone, even with the closing price, there is no room to the wick here. Almost, there is no room here. That's an A++. Liquidity sweep of the liquidity sweep itself. Engulfing candle, perfect actually. But sometimes, since nothing is perfect in this world, I say, okay, I have a breakthrough. Yes, I had a level here, but try to imagine there was no level here. I say, yes, that got rejected. So there is a zone here. There is probably something here. So it went through. So above that, I will put my limit order here. It will get me in. And from here, let it fly. Oh, you see, I was mistaken here. That's the reason why I always say only with closing candles is talking to that one, because that one was red and I was thinking, yes, there's smaller candle to come down. But this is a 15-minute candle, not 1 minute, not even 5 minutes. That's 15 minutes here. So many things can happen. Yes, it could have been maybe to come here nearby, but that one shows me no. I want to go up here. That means here for us, I had the first leg. Or let me make it even better, maybe here. First leg, pullback, second leg, consolidation. Now we're going for the third leg here. Any question here, guys? No one? Okay, that was for the day. Wish you all a nice day. Have a good one. Happy trading to all of you. Don't over trade here. And see you by tomorrow. Have a good one, everyone.
Thanks,
Bye-bye.
Bye.
Bye.